Hey everyone, it's Daniel here from InfoVest. Hope you're all doing well. Let's talk about inflation. So we got the CPI, US CPI inflation numbers that came out. We had basically the CPI year over year number coming at 5%. The expectation was the number was going to come at 5.2, so it came in better than expected. So yes, the headline numbers came in lower. Previous number of the headline CPI was 6%. So definitely is a big drop. And it was expected because if you look at oil prices and the headline numbers take in consideration of energy, oil, gasoline prices, yes, we did see gasoline prices drop before the OPEC plus cut that happened, right? So it would be expected that yes, you would see the headline number come in lower. And that's what caused stocks and bonds to basically rally today. Now, the core number, right? Both month over month and year over month came in at 0.4%, which is as expected, in line. And the year over year number came at 5.6. So as expected as well, in line. Now this 5.6 is higher than the previous months of 5.5, which is basically telling you it's slightly moved up, but you haven't had much of a big change, which is why you could argue that today's sell-off in the equity markets came due to, yes, the headline number is lower, but the core number is not coming down as low as the market participants and the Fed would like to see, right? We did get the minutes from the Fed. The Fed minutes came out at 2 p.m. today. We did hear from the Fed say that, we are seeing the disinflationary process, but it's not as big or evident or not as what we expected, right? Which basically hints towards that tightening still needs to be there. It may not mean that they're going to continue with the rate hikes, but some sort of tightening, whether it's QT or keeping rates higher for longer, would be needed. Now, when you look at the numbers and you dive in a little bit deeper, another reason for the sell-off is that yes, if you look at the energy prices, they have dropped significantly. And we know that from the price action that we've been seeing in the oil market. However, these numbers are not considering the OPEC plus cut numbers, which we're going to see in the next report, which means that the headline number is expected to be higher, a little bit higher, because we're seeing oil now sitting and even moving up higher today around $83 a barrel. And if it continues to move up higher, then sure, that's going to affect the headline number, which is also going to affect the consumer expectation. And if the consumer expectation is that inflation is still not coming down, then it does seep into making the problem worse off, which means the Fed has to continue on its tightening cycle. Now, other than that, if you look at the core inflation numbers, I can see here in the numbers that the shelter component rose about plus 6% versus 0.8% prior. So it's still increased. The services X shelter came in at 0, and the core services X shelter came in plus 0.4% versus plus 0.43%. So even the taking out the shelter component, right? Um, and looking at the core X shelter component, which is the Fed's favorite number, it still have yet to show a significant decrease. So there's still work to be done. Don't get confused by this number. There's still work to be done. The markets are pricing in a 75% chance of a rate hike coming up this May, early May, 25 basis point, and then the expectation is probably we're going to get a pause. So the Fed's probably going to pause, just like other central banks out there, just like Bank of Canada, who's in pause mode. And that pause is to assess where inflation is and where this whole market is going towards, where the economy is going. Are we going to see more bank runs, right? Even though the Fed has told us that not to worry with the bank runs, but that could be totally wrong. They could be totally wrong, and you can see things shift and change very rapidly and very quickly. And we've heard from the Fed did tell us that, hey, we can expect that tighter credit conditions is going to be equivalent to, tightening. We're going to see that that's going to seep into the demand. Demand is going to get lower, which is hopefully going to also bring the prices down in terms of inflation overall. Well, the other big thing that happened today at 2 p.m. also was the Fed meeting that came out, right? The Fed came out and they did say things that was as expected. Some slightly on the dovish side, saying that, we need to assess the policies and tools, and we don't want to overdo certain things. But at the same time, more hawkish, on the hawkish tone, saying that, we are still expecting stronger disinflationary processes. And we have yet to see that. We are seeing the disinflationary process begin, but not as big or not as large as what we expected. The biggest thing that the Fed said in the minutes is that they started to confirm that we could see a mild recession. Okay, so this is the biggest thing, that we could see a mild recession, which basically hints towards that they're pricing in that a recession is coming, and it may not be mild because, like I've been saying on this channel for a very long time, in order to get inflation down, in order to have true disinflationary process, true deflation, or whatever you want to call it, to get prices down, you need a recession, you need a hard landing, which is now their, not their base case, I don't want to say that, but they're now fully coming out and saying, okay, we're probably going to expect a mild recession this year. So they understand what's happening, they understand what's coming. The central bank did know about the bank failures that happened, and I'm pretty sure they know much more than what we know. And the fact that they're now expecting a recession to come very soon is just the beginning for all the domino blocks to fall. And eventually, when that happens, and when the tightening really really affects a lot of the markets, whether it's shadow banking or whatever it is that's next to break and next to fall, that is what is going to create and cause inflation to finally come down. So very interesting to note these few things today, the CPI, the Fed minutes today. It's going to be really, really important that as we approach May, that we also hear what the Fed has to say and what they do with the upcoming meetings and where their forward path is when it comes to hiking rates. Or are they going to pause, or are they not, right? So you let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.